Okay, so we are now officially recording this session, right? So let's just jump right into it, guys. I understand that there are, a few beginners on this call. So I'm just gonna start from scratch. I'm just gonna start from the beginning and just, work my way up into, what is the foreign exchange market? What is it that we do? How can we how can we profit and benefit in this market? And then from the explanation, I'm just going to quickly just run down through the whole process of what it is that I do in the markets and how I trade from beginning to end. Where I start, why I start there, what it is I'm looking for, and then the transition from that one to the next one to the next one until eventually me taking and placing a trade. So I'm going to be breaking down the whole process. But before we do that, it's very important for us to have a bit of background on what it is that we are part of and how it works. So let's just quickly just start with what is the foreign exchange market, right? See, the foreign exchange market is just simply a market where buyers and sellers meet, right? It's a market where buyers and sellers meet, right? So what does this then mean? So let me just quickly give you guys an example of foreign exchange, right? Of a foreign exchange transaction, of what we mean when we say the foreign exchange market. What really happens in the market is just an exchange of one currency for another, right? So I'll give you guys an example. Say I have to travel now to where? To London, right? See, when I get to London, what's going to happen is I can't transact in rands in London, right? I have to transact in pounds, all right? So when I get to London, the first thing I'm going to have to do is I'm going to have to exchange my South African rands for the Great Britain pound, all right? Now, if I go to London and my friends there say, hey, listen, you're not going to spend any money, everything is on us, you are our guest, and I don't spend the pounds that I've converted, and then after 1 week, I fly back to South Africa. See, what's going to happen again is I can't transact with my pounds in South Africa. So I'm going to have to exchange my pounds back into rands. Now, both of these transactions, when I'm converting my rands to the pounds and when I'm converting the pounds to the rands, those are foreign exchange transactions. Why? Because I'm exchanging one currency for another. Now, when I come back to South Africa now and I exchange my pounds back into rands, see, one of two things is going to happen. Either I might get more money than the money that I left with, or less money than the money that I left with. Now, why is this the case? This is because the currencies, they fluctuate, right? They fluctuate in value. They gain strength and they lose strength. I'll give you guys a typical example. We all know that the dollar is a universal currency, all right? A couple of months back, the rand to the dollar was about 14 rand something. But currently right now, that same rand to the dollar is now 17 rand something. So what does that mean? It means that the dollar gained strength and the rand lost strength over that period. So what does that mean? It means that the currencies, they fluctuate in value, they fluctuate in strength, all right? They gain strength and they lose strength, but this happens on a daily basis. So every single day, the markets are moving. Every single day, the markets are fluctuating. Now, this is where we as foreign exchange traders come in, because we get the chance to capitalize on these movements. We get the chance to capitalize on these imbalances in the markets. We get the chance to predict whether or not a currency is going to gain strength or lose strength, and we can actually take advantage of that and buy a market that we know is about to gain strength or sell a market that we know is about to lose strength, right? So what does it then mean? It means that as traders, we are always on the right side of the trend, right? Because regardless of whether an economy is booming or crashing, we can still profit in that space. We can still profit in that market, right? So that's why I love being a trader, is because regardless of what's really happening all over the world might be in a recession, but we can still make money off the recession. We can still make money off the downs. We can still make money off the crashes of the economy. But when the economy is back up and is booming, we can still make money from that. We can still make money when everything is up. We can still make money when these currencies gain strength. So regardless of what is really happening all over the world, as a trader, you are always on the right side of the trend. So you can always be profitable and you can always be, in a good financial position as a foreign exchange trader, right? Now, this market, which is the foreign exchange market, is a $6.6 trillion market per day. All right. Now I'm going to repeat that. This is a $6.6 trillion market per day. So what does it then mean? It means that every single day, $6.6 trillion gets thrown up in the air, and then big time corporations like your banks, your big time investors, your hedge funds, all your retail traders, they try and capitalize and take a piece of that on a daily basis. So what does that then mean? It means that every single day, there is $6.6 trillion in the market that is there for the taking. So I always ask people the question of, you have to ask yourself then, how much of that piece and how much of that piece of that pie do you want for yourself? Now, of that $6.6 trillion, 80% of that amount comes from the banks, right? It comes from where? It comes from the banks. So what does that then mean? It means that obviously now the banks are the market movers, because practically, if we're thinking about it, if the banks control 80% of the market, then they really control the market and how the market is going to move. So I like calling the banks the market movers, right? Because they move the market, right? Because if 80% of the market is doing one thing, majority of the market is going to do is it has to follow, right? Because they dictate whether an economy is going to push up or push down based on, the influx of capital that they ingest and invest into this market. So because now we understand that the banks are the market movers and we always want to be on the right side of the trend, what is then important for us to do? It is important for us to always look at what is happening all over the world. What are these big banks doing? So that we can follow those trends. What are these big banks doing, right? What is really happening all over the world, right? Are there any news that are going to affect the strengths or the weaknesses of these currencies, right? See, now this is then where we actually start to dive into the whole trading aspect of things, right? Because now we understand what the foreign exchange market is. Okay, this is a place where we're exchanging currencies. We're buying certain currencies and we're selling certain currencies against each other based on the strengths and the weaknesses, right? So we understand that, we tick that box. Okay, so who are these players? Who is doing all this buying and selling, right? So we understand that it's the banks. We understand that it's hedge funds. We understand that it's big time investors. And then it's us as the retail traders, right? So, okay, now, if that is the case, right, and we understand that, okay, this is a $6.6 trillion market, right? And regardless of whether an economy is booming or crashing, we're always on the right side of the trend. In order for us to be on the right side of the trend, it's very important for us to have enough information so that we can make informed decisions and understand what the market is really doing so that we can ride the wave and we can join and latch on to the right side of the trend so we don't miss these trends, right? So now that we understand and we have all this information, right, what is the next best thing to do? The next best thing to do is for us to get informed, right? It's for us to dive deep into understanding how and what is happening when it comes to all these different currencies, right? So that we can understand whether when a currency is going to gain strength, whether a currency is going to lose strength, whether a big bank is going to, be on holiday, right? So this is where forexfactory.com comes in, because Forex Factory is basically an avenue that breaks down exactly what is happening all over the world and what is the impact it is going to have on the different currencies. Right now, remember, it's very important for us to understand what is happening with these currencies, because that is the currency that we're exchanging. We're exchanging currencies in the foreign exchange market. So if we have no information on these currencies, how can we then know whether or not a currency is going to gain strength or lose strength? How can we then know which one to buy and which one to sell? All right. So it's very important for us to have well-informed knowledge, right, on what is really happening all over the world and how big of an impact or is whatever is happening, going to affect the strength or the weakness of the currency, right? So this is where Forex Factory comes in, right? So forexfactory.com for me breaks down and simplifies this in the best way possible, right? So how does it happen, right? See, what happens is that there are 4 different types of folders, right? Obviously, today we can only see 2, right? But normally, there are 4 different types of folders. There is your silver folders, there is your red folders, there is your orange folders, and there is your yellow folders, all right? Now, before I start breaking down what each folder represents, all right, are you guys still with me, all right? Are you guys still taking notes? Because remember, note takers are money makers. You will not retain all the information that I'm showing. Drop some 222s if you guys are still with me, right? Because I always tell people to say that you can't retain all the information that I'm sharing all at once, right? So that's why it's very important on every session to make sure that what you're doing is you're taking down notes, right? Because note takers are money makers, so that you can go back to that information after the session, right? And revisit that information, go over it, so that when you practice, you have the information next to you, you understand what is really happening, all right? So if you guys are with me and you guys are still following me, all right, drop some 222 so I know that we're all together. Okay, cool, all right? So we have these 4 different types of folders, right? So let me break down these 4 different types of folders. See, the first folder we're always talking about is a silver folder. Now, a silver folder represents a bank holiday. Now, why is this important for us to understand when there are bank holidays? Remember, I told you guys and I said that the banks are the market movers because they take up 80% of the foreign exchange market. So what does it then mean? It means that if a specific bank is then closed, wouldn't that then mean that that market is not really moving? Because if a market mover is closed, then that means that the market is not moving, because that means that there's no money being pushed out into circulation. There's no money being pushed out and invested into the market because that specific bank is on a holiday, right? So I always tell people, I say, you want to avoid currencies where there is a bank holiday, right? You want to avoid bank holidays because there's not really much movement that is happening in that country, in that currency, all right? Because the market, there's no money being pushed out into circulation, there's no money being invested, so that market is really not going to be fluid and liquid, right? So that is the first folder. So every time you jump on Forex Factory and you see a silver folder, for example, maybe on GBP, that means that there is a bank holiday, right? Or on JPY, right? When we see a silver folder on JPY, that means that Japan currently has a bank holiday. So what does that then mean? It means that there is no trading that is currently taking place in Japan. There's no money coming out of Japan, right? So why would we then start to buy and sell, against the Japanese yen when there is no currency, there's no money being pushed out, right? So if Japan is on holiday, we want to stay away from trading anything that has to do with the Japanese yen, right? Because that market is not going to move, right? Hopefully that makes sense, right? Now, the second folder is your red folder. Now, we understand that red means danger. Red means, stop. Red means stay away, right? In any and everything, red is associated with danger. Same thing here, right? Red here means high impact. Now, our style of trading, right, is very quick, right? It's money in minutes, right? So what does that then mean? It means that we do not want any volatility in the markets, right? We do not want any volatility in the markets because we are quick, right? Quick in, quick out. So any big movements, any big spikes, right, are not conducive to our style of trading. So that's why we're always avoiding what? We're always avoiding red folders. Another reason why we're always avoiding red folders is the fact that we are not fundamental traders. We are technical traders. Now, I'll give you an example of both, right? Say fundamental trader, right, is a trader that trades purely based on the impact of the news, right? So they capitalize on, what the news are going to have, what type of impact the news are going to have on specific currencies, and they capitalize on those before the news happen, right? So for example, a fundamental trader would see, okay, there is a red folder on AUD, and then they assess and analyze how that is going to affect the strength or the weakness of that currency, and then they capitalize on that based on the information that they found about that specific currency and those news, right? Now, a technical trader, on the other hand, is someone who trades purely based on what is price doing, right? What is previous price actually doing? Because price moves in patterns and in waves, right? So you, as a technical trader, your duty is to analyze what the market has been doing previously, because when you understand what it has been doing previously, it will then give you ideas and probabilities of what it will do in the future. Because in the market, the future is solely dependent upon the past. So a technical trader is someone who analyzes the past, the past information, and says, okay, based on this information, this is what I think the market is going to do next. And they capitalize based on that. Now, me in specific, and everyone on this call, because everyone on this call is learning from me, right? And how I do it, right? We are technical traders, right? So as technical traders, we try and stay away from volatile markets as much as possible, because they tend to affect our technical analysis, right? Volatile markets tend to affect our technical analysis. So we try as much as possible to stay away from the news, right? So what does that then mean? It means that when we see red folders here, we definitely want to stay away from those markets, because that means that those are going to be very volatile markets, and we do not want to be in the markets when the markets are volatile, because they're going to affect our technical analysis. They're going to affect what it is that we want to see in the markets, right? So hopefully that makes sense. So red means danger. Red means stop. Red means stay away, right? I'm glad that we got that one. Now, the third folder is your orange folder, right? So what does an orange folder mean? Your orange folder simply means medium impact news, right? Now that means that whatever news are going to be shared on that specific currency at that specific time is not going to have that big of an impact, right? It's going to have a medium impact. Now, I always tell people to say that you can trade when the market has medium impact news. You can trade certain currencies, but what you want to do is you want to use good risk management, because remember, first and foremost, we're not fundamental traders, so we don't trade based on the news, right? So as technical traders, we don't really understand how big of an impact those news might have on the strengths or the weakness of the currency. So we want to be very cautious and very careful when we are jumping into the market around the time of what? Around the time of orange folders. All right. And then the last folder, ladies and gentlemen, is your yellow folder. Now, your yellow folder just simply means low impact news. Now, low impact news is by far the best, because it means, as technical traders, that is the ideal day. When you open the news and there's only yellow folders, that is an ideal day, because that means that whatever news are going to be shared on that specific currency at that specific time on that day is going to have a very low impact on the strengths or the weakness, or let me say on the fluctuations of the currency, right? It's not going to really affect the fluctuations of the currency, which means that is where price action thrives, because then you can purely just base your analysis on what has price been doing previously, so that you can be able to identify what price is going to do in the future, right? So when we only see yellow folders, for example, look at the day today, right? As much as we did have some red folders around 5:30 on AUD, but look at the rest of the day. Can we all see that from the rest of the day, we only have yellow folders? So today is going to be a good day in the markets, right? Today typically is a good day in the markets, because this is where price action thrives, because the market is really not going to be affected that much by any news in the whole entire world. All right. So now that we've understood the 4 different types of folders, we understand what they represent, and we understand how to react and respond to each one of them. The next thing that we want to do now is we want to identify trends. All right. So let me go to the currency strength meter. We want to identify trends. Now, why do we want to identify trends? We want to identify trends because the trend is your friend, right? The trend is your friend, all right? And I always say this when it comes to the foreign exchange market, and I always say that you always want to make your trend, the trend, your friend, because you never want to trade against the trend. Now, I always make this example, and I'm like, it's like swimming. Now, I can't swim, right? But I know for a fact that every time you go to the beach, what do the lifeguards always tell you? The lifeguards always tell you to never swim against the waves. You always want to swim with the tides. You always want to ride the wave, right? Because that is how the water is going to push you when you're drowning. You always want to follow and ride the wave because the waves and the water is going to push you back, to shore, right? So when you start swimming against the wave, when you start swimming against the trend of the water, that is when you drown, right? Because the waves are fully momentous in the direction that they're pushing. So when you're trying to swim against them, right, it's going to need more effort, and that's how you end up getting tired, right? So it is ideal, and the ideal situation is for you to do what? To ride the wave. Also, it's like surfers, right? I don't know if you guys know surfers. Surfers are those people with those surfboards who, surf on top of waves. Now, what do those people do? Those people, they sit and they're patient and they wait for the wave. And then when the big wave comes, what do? Is they ride the wave. They never go against the wave. They go with the wave. They let the wave carry them. See, that is what we are as retail traders. So we are retail traders. So we want to let the big banks, the market movers, the big time investors, the hedge funds, we want to let them do all the heavy lifting. And all we want to do is we just want to ride and catch on the wave. So if there is momentum in a certain trend, we want to capitalize on that trend and let them do all the heavy lifting. We are just there for the ride, right? So with that being said, it is very important for us to be able to identify the different types of trends, right? Now, there are 3 types of trends, but I always put emphasis on the 2 because the 2 are the ones that we are always looking out for, right? And those two is an uptrend and a downtrend, right? An uptrend and a downtrend. Now, an uptrend, ladies and gentlemen, is when the market is pushing to the upside. A downtrend is when the market is pushing to the downside. Now, when I say the trend is your friend, what do I then mean with regards to these types of trends? I mean that if we are on an uptrend, you want to continue with that uptrend. So how do you continue with an uptrend? You buy. So on an uptrend, you always want to buy because the market is pushing up, right? So remember, when you are buying, you want to buy at a lower price because you're predicting that price is going to do what? Is going to push up, right? So you want to buy at the lowest point possible because you are predicting that there is a high probability of price continuing to push up on this uptrend. And then when you are selling, you want to sell at the highest point possible because you're predicting that the price is going to push down. So you want to be able to capitalize and sell at the highest point possible so that when price starts to push down in your favor, you are capitalizing and you are making money. So on an uptrend, when the market is pushing up, you want to buy because you're predicting that the market is going to continue pushing up, which means that it is going to open up opportunities for you to make money. And then when you're on a downtrend, you want to sell because you are predicting that the market is pushing down. And so you want to sell and you can capitalize on that movement to the downside, right? So now, how do we spot uptrends? How do we spot downtrends, all right? Now, this is the cheat code, right? Now, this is livecharts.co.uk, currency strength meter, sorry. So now, these currencies, they have strengths, right? So me personally, what I like doing is I like comparing the strengths against each other to determine what the market is doing, right? Now, there is what we call a currency pair. Now, a currency pair is two currencies combined. So those are the two currencies that we are exchanging against each other. Those are the two currencies that are competing, right? Now, the first currency, right, is your base currency, right? So the first currency on those two currency pairs is your base currency, all right? And then the second currency is your quote currency. Now, whenever the first currency, ladies and gentlemen, is stronger than the second currency, all right? Let me repeat that. Whenever the first currency is stronger than the second currency, that is an indication of an uptrend. That is an indication of an upward momentum, an upward movement, all right? So let me give you guys an example. Let's look at AUD JPY and AUD CHF, right? Can we all agree that in both AUD JPY and AUD CHF, AUD being the first currency is stronger than both, right? AUD JPY is a currency pair. AUD is the base. JPY is a quote. Look at the strength between AUD and JPY. Can we all agree that the first currency, which is the base currency, which is AUD in this instance, is way stronger than the second currency, which is a quote currency, which is JPY in this instance, right? So what does that then mean? It means that I am looking for an upward momentum. I'm looking at a market that should potentially be pushing to the upside. So what does that then mean? It means that I want to buy that market because I want to capitalize on the strengths of this currency, right? I want to capitalize on the movement, on the momentum, on this trend, because remember, the trend is my friend, right? Now, the second trend is a downtrend. Now, a downtrend, ladies and gentlemen, is now the opposite of an uptrend, which means that if on an uptrend, we're saying the first currency has to be stronger than the second currency, for a downtrend, the second currency now must be stronger than the first currency, right? So what does it then mean? That means that Euro, USD, right? For example, which one is the first currency, right? Is the euro. Which one is the second currency? It's the USD, right? Which one is stronger? It's the second currency, USD. So every time we're looking for a downtrend, every time we're looking for the market to be pushing to the downside, what we want to see is we want to see the second currency stronger than the first currency, because that is then an indication of a downward momentum, right? And what do we want to do on a downtrend? We want to sell a downtrend because we want to capitalize on the movement to the downside, right? Now, if you guys are with me, right, and you guys are following me so far, all right, drop some 111s. All right, okay, awesome, awesome, awesome. I see all the ones. I see all the ones. Now, let's go and look. Now, here's where the magic happens, right? Look at AUDJPY. Now, let's go to a trading view. Now, trading view, ladies and gentlemen, is where we do all of our analysis, right? This is where we look at the charts and we determine where we want to buy, where we want to sell, why we want to buy there, why we want to sell there, right? So all you simply have to do is just punch in trading view on Google. It is free, right? And once you have done that, right, you can have access to all the different currency pairs. You can add currency pairs, you can remove currency pairs, all right? So let's see what we have. So what did we say we were looking at? We said we were looking at AUDJPY. All right, so let me go to AUDJPY. So here's AUDJPY, all right? Now, let me go back here, right? What did we say we wanted to see on AUD/JPY? We said we wanted to see a uptrend, a market pushing to the upside. Now, let me show you guys something. Look at where the market was here. Look at where the market is currently. Can we all agree that currently right now, as we are speaking, the market is on an uptrend? The market is pushing to the upside, right? Because look at the lowest point and look at the highest point. Clearly, it is an uptrend because it is pushing where? To the upside. Another currency pair that we looked at was AUD/CHF. Look at AUD/CHF. Where's the market now? It is here. What is the market doing? It's pushing up. It's on an uptrend. So can you see that before we even open these charts, just by us examining the strengths, we can already tell whether we are on an uptrend or a downtrend. We can already tell what we should be looking for before we even open and start looking at it. All right. So now that we've identified, let's look at the sell also. What was the sell trend that we were looking at? Euro USD. Okay. Because I want to show you guys a bit of both. All right. I want to show you guys a bit of both. Now, remember on Euro USD, what did we say we wanted to see? All right. Euro USD, we said we wanted to see a sell trend because the second currency, which is the USD, is stronger than the first currency. Look at Euro USD here. Can we all agree that Euro USD is on a what? Is on a sell trend? Yes, we can. All right. Can you see that? Now, here's now where it starts to get interesting. Because now that we see, right? Now that we see that these are the trends that we have, right? We've got this downtrend. We know we're supposed to be selling. The next best thing for us to do right now is to continue with the trend. So before I even touch on that, right? It's very important for me to be able to first tell you guys that, like I said earlier, the market moves in waves and in patterns, right? And in it moving in these waves and in these patterns, right, it creates floors and it creates ceilings, right? So what does that then mean? It means that if I have a tennis ball, right? If I have a tennis ball and I take my tennis ball and I throw it towards the ceiling, what's going to happen to the tennis ball? It's going to bounce at the ceiling. It's going to push back the downside. Is that not so? Right? If I take a tennis ball and I throw it towards the floor, what's going to happen? It's going to bounce at the floor. It's going to push back to the upside. See, that is how the market operates. The market operates in patterns and in waves, and it has ceilings and floors. So every time the market pushes and gets towards the ceiling, majority of the time it's going to bounce at the ceiling, push back to the downside. When it's near a floor, it's going to bounce at the floor, push back to the upside. So our duty is to be able to identify those floors and identify those ceilings, all right? Because it is very important for us to be able to identify those areas, because those are very crucial areas, because those are the turning points of the market, right? Those are the turning points of the market. Now, let me put that into practice and into technicality, right? So on a downtrend, so remember Euro USD is a downtrend, right? On a downtrend, what we want to see is we want to see a market pushing down, correct? Now, also we want to sell. We want to look for the next best place to sell. Now, here's a very important fact. When you want to sell on a downtrend, you always want to sell on top of previous floors, right? Always want to sell on top of previous what? Previous floors. So your duty when you're on a downtrend is to be able to identify floors, because you understand that floors are going to turn into ceilings. I'll give you guys an example, right? I'll give you guys an example. Let's use let's first look at whether or not this is a floor. So look at what the market did, right? So the market pushed down, 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 down. And instead of continuing down, what happened? Can we all see that it bounced and it reversed and it started to push up? So we classify this as a floor. Why? Because the market couldn't break this area to the downside. Instead, it bounced and it pushed back to the upside. So it created a floor, right? So remember I said to you that what do we want to do? We want to sell on top of what? On top of previous floors. Now look at what market did. Can you see that this was a floor? But look at the same floor. Look at what the market did here. It treated this floor as a ceiling because it pushed up, it bounced here, and instead of continuing to push up, it pushed back down. Now, when I say you always want to sell on top of previous floors, this is exactly what I mean, right? This is exactly what I mean. Even this area here, right? Look at what the market did. It broke this area, it pushed back up into it, boom, it dropped, came back in, boom, it dropped. So whenever you have a previous floor and you're on a downtrend, you want to identify and mark that floor because that is going to be a critical area on this downtrend, right? You always want to find those areas because that is your selling area, right? Look at this area, for example, here as well. Look at what we had here. Market pushed all the way here. What happened? It bounced to this area. It pushed up. What did it do? It created a what? It created a floor, right? So eventually, when the market breaks that floor, look at what happened here. Can we see that it came back up into that floor? And then what happened? Boom! It respected that floor as now a ceiling, and it pushed all the way to the downside. And then it broke this area. And then instead of coming back, it treated this area as a floor again. Because look at how many times it bounced here once, bounced twice again, and then it pushed up. And then when it eventually broke this area again, what did it do? It came back to that same area again, and then it dropped. So can you see that around this area, there's been a lot of movements. Around this area, there's been a lot of movements. So these are how you spot your critical areas, because these are going to be your good areas for you to be able to jump in on the market and continue with the current trend, right? Now, we now look at where the market currently is, right? And we say, okay, so this is where the market is right now. So what is it that I would love to see from the market in order for me to say, I'm not ready to take a sell? For me personally, I'd love to see this market push back up into this area again, because I understand that this is a very critical area, because look at how many things have been happening around this area. So there is a high probability of price reacting and responding to this area and continuing on this downtrend when it pushes up into that area. Are you guys with me? All right. If you guys are with me, drop some 222 so I know that you're following. All right. If you guys are with me, drop some 222s. So I know you guys are following. Okay, awesome. Now, what do I want? Let's look at an uptrend. Okay, let's go look at an uptrend quickly. Which uptrend do we have actually? Let me see. What do we have on GBPJPY? GBPJPY. Okay, let's look at GBPJPY quickly, so I can give you guys an example of an uptrend as well. Of what we do when we are on an uptrend. So let's quickly just look at this chart quickly, right? First thing is first is, can we all agree that we are on an uptrend here, right? Market has been pushing up, right? Now, why can we, from the get-go, identify this as an uptrend? Is because we can clearly see that GBP to the JPY, GBP is stronger than JPY. And remember, every time the first currency is stronger than the second currency, what are we looking at? We're looking for an uptrend. So we open the charts, and what can we see on the charts? We can clearly see an uptrend, right? We can clearly see market pushing to the upside. Right? Now, remember, on a downtrend, we want to identify all the floors because we always want to sell on top of floors. Now, on an uptrend, we want to identify all the ceilings, right? On an uptrend, we want to identify all the ceilings because, sorry guys. Why is it important for us to identify all the ceilings? It's because it is important for us to identify all the ceilings because on an uptrend, our duty is to buy on top of ceilings, right? We always want to buy on top of what? On top of ceilings. So it is very critical for us to be able to analyze and be able to identify all those critical ceilings because a ceiling is going to turn into a floor. So once price breaks a certain ceiling, it has to come back and respect that ceiling as now a floor. Now that is what I like to call the break and retest of structure, because that is then giving us confirmation that, hey, listen, price is now ready to continue with this momentum. So as we can see here, obviously we are on an uptrend because price has been bullish and price is pushing to the upside. And we notice that from the strengths of the GBP against the JPY, right? Now, let's start from the beginning. Look at what happened here, right? Price was pushing up, bounced at that area, pushed back down. So what did it do? It created a ceiling. It came back up to that same area. What happened? It responded the same way. It bounced and pushed back down. Came back for the third time, still came back down. Pushed up again, still. And eventually what happened is that it broke this area. Now, as soon as it broke this area, now this is now a what? This is now a ceiling, but now it's going to turn into what? Into a floor. So eventually, look at what price did. It came back to that same area twice. And instead of continuing down, what happens is that it reversed and it continued to push up at those critical areas, right? Now, look at on this way to the upside, right? What happened again is that price created another ceiling because it pushed up and then it came down, right? So it bounced at the ceiling, pushed back to the downside. But look at what happened eventually when price broke this area. You can see it broke this area, pushed up, and then came back down to respect that area, right? Which was a ceiling, turning it into a floor, and then to give it more momentum on that uptrend. Boom, right? And then look at what happened. It came back to that area again twice after that, and exactly the same outcome happened. Look at what happened. It pushed into this area to that previous what? To our previous ceiling, turned it into a floor, it pushed up. Again here, what happened? It pushed into this area, which was a what? Previous ceiling, turning into a floor, boom, it pushed up. Now, every time price pushes up, it will create new ceilings so that it can come and create new floors. As much as on a downtrend, every time price is on a downtrend, it will create new floors, which are going to then become new ceilings, all right? So on this uptrend, what happened is that price created another what? Another new what? New ceiling. So eventually, what are we expecting? We're expecting that when price then breaks this area, eventually it will come back down to respect this area because this was a what? This was a previous what? Previous ceiling, now turning into what? The floor. Look at this area here. Look at this area here. Let me use my marker. So all these areas that I'm marking here, all right? These are all the areas where you could have taken your buy to continue with the trend. Remember I said that on an uptrend, you're always looking, all right, for a buy. So the next best thing for you to do is to identify where is the best place for me to be able to take that buy. Where's the next best place for me to be able to continue with that trend? all right? But also paying attention to the fact that when you are buying, you always want to buy at the lowest point possible. So where is the lowest point possible? It is on top of a what? A previous ceiling, because that is the lowest point. So boom, market bounces there. You take your buy, it pushes up. Market comes here, it bounces here, boom, you take your buy, it pushes up. Now remember, every time the market pushes up, what does it do? It creates new ceilings, all right? So look at here, on its way to the upside, what did it do? It created a new ceiling. Look at what happened to the ceiling over here. Can you all see that this ceiling now then, even over here, this ceiling over here is now turning into what? Into a floor. Market is failing to break this area, and then boom, eventually it does what? It pushes up. Now, when it pushes up, it breaks what? It breaks the next ceiling, right? But what happens when it breaks the next ceiling, look at what happens. It comes back down to respect the ceiling as now a floor, and then what happens? It pushes back up. Look at this area here. Look at this area here. All right. Now, what is our thinking now when we see price around this area now? All right. What is our thinking? Our thinking is we are currently at another good buy area, right? Because price is now where? It is now at an area where there was what? There was a ceiling, right? And this is a strong ceiling because look at how many times price came and broke and touched this area and pushed back down. So our analysis and our prediction is that because price is at this area here, while we could be seeing at this area, is we could potentially be seeing price reverse and push back to the upside, right? So that in a nutshell is how we predict price action, all right? Now, because of time, because we have ended the session, we have completed the 1 hour session. On the evening session, what we're going to be doing is we're going to be touching on how to execute the trades and the strategy, right? Because there's a strategy that we have on how to, okay, now we know where to buy, we know how to analyze, but what confirms us taking a trade, right? What is the final step, right? So I'm going to be breaking down the 5-point system strategy, all right, that we use that confirms now, okay, now is the perfect time to enter into this trade. What do we have to look for? And then how to take that trade and how to place that trade on the broker account. So let me stop sharing right now so we can close off this session. Hopefully this was very informative. Hopefully you guys got some value and hopefully you guys are ready to implement it. I have recorded this session. I will share this recording.